The silver market is sending a strange and shocking signal right now. On paper, silver is trading near $70. But if you try to buy real, physical silver, the price suddenly jumps to $120 or even more. Same metal, same silver. Two very different prices. This is not a small gap. This is a warning. And if you don't understand why this is happening, you could be the one paying the price later. Before we go deeper, take just 1 second to like this video and subscribe to Global Economy Insights. It really helps the channel grow, and it tells YouTube to show you more content like this. If you want to understand real money, real assets, and what's actually happening behind the scenes of the global economy, you're in the right place. Now let's talk about silver, because what we're seeing today is not normal, and it's not accidental. For decades, silver is traded in two worlds at the same time. One world is paper silver. This is what you see on screens, charts, and trading apps. Futures contracts, ETFs, derivatives, and promises written on paper. The other world is physical silver, real bars, real coins, metal you can hold in your hand. And for many years, these two worlds stayed close enough that people didn't take questione italiano. But now, that connection is breaking. Paper silver is traded in massive volumes every single day. Most of it never results in real silver being delivered. It's just contracts changing hands. Banks, hedge funds, and large institutions trade paper silver like a number in a game. They can create new contracts almost endlessly, which increases supply on paper. When supply looks high, prices stay low. That is how paper silver can trade at $70, even when real silver is becoming harder to find. Physical silver is a completely different story. You can't print it. You can't create it with a click. It has to be mined, refined, transported, and stored. And right now, physical silver is facing serious pressure. Demand is rising fast, while supply is struggling to keep up. Industrial use alone is exploding. Silver is essential for solar panels, electric vehicles, medical equipment, electronics, and advanced technology. Every green energy plant in the world depends heavily on silver. At the same time, investors are waking up. Many people no longer trust paper promises. After years of money printing, inflation, banking stress, and debt crises, confidence is fading. People want something real. Something outside the system, and silver is one of the most affordable precious metals for average investors. That's why physical silver demand is surging globally. Now here's where the split becomes dangerous. When too many people demand physical delivery, the paper system starts to crack. Most paper-silver contracts are never meant to be settled with real metal. They rely on the assumption that only a small number of traders will ever ask for delivery. But when that changes, the system is exposed. We've already seen signs of this stress. Dealers running out of stock, long waiting times, premiums rising sharply. In some regions, you can even find popular silver coins, unless you're willing to pay far above the paper price. That is how we end up with physical silver at $120 or more, while the screen price tells a completely different story. This gap is not just about supply and demand, it's also about trust. Paper silver depends on trust in exchanges, banks, and financial institutions. Physical silver depends on reality, weight, purity, metal. And right now, trust is shifting from paper to physical. Think about this for a moment. If paper silver truly represented real silver, the price difference wouldn't exist. Arbitrage would close the gap instantly. Traders would buy cheap paper, silver, demand delivery, and sell it at higher physical prices. But that's not happening on a large scale. Why? Because many people know or suspect that there isn't enough silver behind the paper claims. Some estimates suggest that for every ounce of physical silver, there are dozens or even hundreds of paper claims. That works only as long as people don't all ask for the real thing at the same time. But history shows us what happens when confidence breaks. Markets don't adjust slowly, they snap. Silver has always been a metal of truth. It exposes lies in the financial system. In the past, silver shortages have led to sudden price explosions. And when silver moves, it moves fast, much faster than gold. That's why it scares large institutions. A true price discovery in silver would reveal years of artificial suppression. This is why the $70 paper price feels fake to many investors. It doesn't reflect mining costs. It doesn't reflect industrial demand. And it definitely doesn't reflect physical availability. The real price of silver is increasingly being set by the physical market, not the paper one. Now, does this mean paper silver will suddenly jump to $120 tomorrow? Not necessarily, but it does mean the system is under pressure, and pressure builds until something gives. It could be a delivery failure, it could be a sudden rule change, or it could be a rapid price reset that shocks everyone watching from the sidelines. For everyday investors, the lesson is simple. Understand what you actually own. Paper silver is a bet on the system. Physical silver is ownership of the metal itself. Both have risks, but they are not the same thing. And today, the market is clearly telling us that physical silver is more valuable than the price shown on a screen. This silver market split is not just about silver. It's a signal about the wider financial system. We're seeing similar patterns in energy, food, housing, and currencies. Real assets are separating from financial representations. And that usually happens near major economic turning points. If you've watched this far, you already understand that this is bigger than a simple price difference. This is about trust, scarcity, and the future of money itself. And this is exactly the kind of deep, honest analysis we focus on here at Global Economy Insights. Before we wrap up, take a moment to like this video and share it with someone who needs to understand what's really happening in the silver market. Your support helps this channel reach more people who want clarity instead of noise. And I'd love to hear your thoughts in the comments. Do you believe the real price of silver is already much higher than paper markets show? Or do you think this gap will close another way? No matter what happens next, one thing is clear. The silver market is no longer calm. The split between paper and physical is growing wider. And history tells us that such gaps never last forever. Stay informed, stay curious, and stay connected with Global Economy Insights.